Good morning and welcome to the World First Weekly Report for today, Thursday the 14th of July. Well, over the last week we've seen the ratings agencies continue to steal headlines in Europe. Moody's took this down this week and they downgraded Irish debt to the same level of Portuguese and Greek debt, BA1. As a result, we've seen the yields rally for sovereign debt, and the cost of insuring against the default by European sovereign debt has also risen significantly. The assessment by Moody's, in our opinion, is a bit of overkill. Their assessment was slightly vague, and to put the Irish debt in the same bag as Greek and Portugal is probably not a reflection of their true ability to pay down their debt. The assessment from Moody's noted that the implementation risks remain significant. That's just touching on the ability to achieve austerity measures, so a fiscal consolidation. And furthermore, they noted that primarily driven by their concern about the prospect about private investor participation in future financial support programs. As a result, we've seen the Aussie Euro cross rally, and we've seen a lot of risk taken out of the market, and we saw the Aussie US dollar cross free fall as a result. Yesterday, however, the Aussie US dollar did recover. This is off the back of the news out of China. The data out of China was positive for risk. We had some strong retail sales figures. We also had a strong industrial production figure. Furthermore, their GDP figure came out quite strong, coming off slightly to 9.5%, however still a strong expansion in their economy. However, one figure to keep an eye on in the coming months is their CPI figure. Recently, the Chinese central bank needed to raise interest rates 25 basis points, and their inflation figure, which came out at 6.4%, is likely to see them continue to raise rates in order to put their economic panda on a diet. The Aussie dollar had its own supporters this week as well. We had a good economic data figure in employment change. We're looking at 23.4 thousand jobs added last week, released last week for the previous month, and as a result we saw some weight put behind the Aussie US dollar cross. Furthermore, in the States, there's a fair bit of political malaise going on in the US. This is really at both a monetary and a fiscal level. At a monetary level, we're seeing the Federal Reserve have a real dichotomy on their hands on whether they continue quantitative easing, that extraordinary measure in order to keep the cost of debt down. However, it's also an ideological debate on whether they should keep the stimulus out of the economy, particularly with their inflation figures continue to rise. These inflation figures were initially thought to be transient based on the energy prices. However, the inflation figures are remaining stubbornly sticky. Furthermore, the debate out of Congress, so we've got the Republicans and the Democrats talking about how they're going to get their budget back in shape, which really gets back to the heart of the Republican-Democrat debate on where to cut costs. This comes down to whether they cut back on military welfare. We're also looking at the tax cuts which were achieved during the Bush era that the Democrats want to have wound back, but the Republicans obviously want to keep in place. There is a lot of risk attached to this debate because on August 2nd there is the risk of the US defaulting. Now this is obviously a slim possibility. However, this is holding risk to credit markets, and indeed, should the US default, any measures taken by the Federal Reserve at a monetary level would indeed be negated. Look out for the policy debate continuing leading up to August the 2nd. The Aussie US has rallied overnight to the 107 plus levels off the back of the China data. If you would like an update on the market, or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your day.